Welcome to Power Charting. I'm Bruce Frazier. I'm your host. Today we're going to have a discussion about trend lines and how to construct trend lines using the Wyckoff methodology. I think you will discover that Wyckoff produces or creates trend lines on charts that's different from the way that most people do them. And there are some unique advantages to the Wyckoff method that I would like us all to understand the rules for, the basic construction technique. And I think you will find that this is a very valuable tool set that you can employ in your chart analysis. So we have a very busy schedule ahead of us. I've put more into this episode than probably I have time for, but we're going to get it done. And so looking at today's agenda, we're going to talk about trendline construction. We're going to use for this analysis, we're going to use crude oil studies, trucking versus railroads, and we're going to do some point and figure analysis that goes along with it. And hopefully, if I do my job right, we'll be able to tie it all together. So here I would like to just say that we have a webinar coming up. It's free. It's for people that are interested in the Wyckoff methodology or are Wyckoffians. And this is our Wyckoff community, the Wyckoff Market Discussions, which are on Wednesday afternoons, 3 p.m. Pacific time. And this coming May 1st, we're offering a free admission to this weekly webinar series. Roman Bogomazov and I do these together, and we would love for you to see what we're up to. We have a great community of Wyckoffians that come to these. We talk about current markets, we talk about commodities and interest rates and whatever is appropriate at the time. Our attendees are welcome to submit their charts for study and analysis that we can all look at. And we're going to have, this coming May 1st, we're going to have special offers for you. And so please join us. The easiest way to sign up actually is to go to my blog, the most recent one. At the bottom, you'll see that there's a link to where and how to sign up. It's very easy. Okay, we're going to start with a discussion of J.B. Hunt. And this is a chart that I recently published in my blog, which was about the transportation index. And I use this as an example because it's such a classic, we'll call it not great, but classic distribution type structure. And which you can see here, it's all labeled. I encourage you to go read the blog so that you can see some of the thinking on this. But I want to focus here on the trend line analysis. So you can see these little boxes around these 3 points. Well, Wyckoff methodology of trend line construction involves again, a very unique approach. And what we do is we look for 3 points very early in the uptrend, which established the trend and the stride going forward. This is a 3-year chart, a 3-year uptrend. And so you can see here that very early in this uptrend at the beginning of 2016, we have an important low that comes in, or intervening rally, and another decline. Well, our purpose or our goal is to identify these two lows that are adjacent to each other, which have approximately equal duration in the decline and equal extent. So that approximately, and you never can get this perfect, is approximately equal amount of decline, approximately equal duration of the decline of the adjacent lows, and then draw what's called a demand line, touching these two important lows and extending these out into the future. And this is called a demand line because every time the market pulls back to the demand line as it's creating its stride. So these two lows right here produced a stride for the advance that tended to stay in place all the way up until the distribution was completed. This is remarkable, and think how useful this is to us to be able to very early on establish where the stride is likely to go in the uptrend. Then we draw the demand line, and this is where demand tends to come in as this stock or the market pulls back to the demand line, tends to touch it, might go slightly through it, but will hold in that area and then turn back up because demand is present at that area, which is where the stride wants to resume its advance. And so here you can see that good demand comes in, produces a rally that goes all the way up into the buying climax. Well, let's talk a minute about how to create the overbought line. The overbought line is a parallel line to the demand line, which we just copy, move it up, and we put it right on the peak of this intervening high. So 3 points make this whole, the whole stride, the whole trend channel for the advance of this stock, in this case, JB Hunt. So here you can see that the overbought condition comes into play here. And right at this area, we have a attempt to throw over, a failure, a test, and then a decline back to the demand line again. And this goes on and on. Well, think how we'll be able to use this trend channel to be able to trade or set trading strategy for taking advantage of the advance as it moves up and up and up. So you can see at the conclusion, there's a throw over of the overbought line, which is only temporary and has a climactic surge at the end. How beautiful is this for us? Because here we see an attempt to throw over, becomes climactic, which is now overbought in our stride of our channel, and is overbought because it's climactic, and then fails back into the channel, attempts to go back up into an upthrust, fails again, and look at the LPSY. It rallies up to the last point of supply, touches the overbought line in the channel. All it can do is touch it. Look at the big tail here. So there's selling that comes in right away, and then failure that just goes down and out of the bottom of the channel, producing a change of character in the way that this stock is trading. So there's so much we can do with this channel construction. So we will move on, and let's look at crude oil here, because crude oil is such an interesting case study. First of all, I'd like to point out that there's a big distribution here. So we're going to come back to that in a minute. But notice this big decline and the steep stride of the decline. Well, will trend channel analysis work on this kind of a decline? And then a really good uptrending follow through after an accumulation is formed. So we are going to have a look and do some construction here among us on how to draw these trend lines. So here's our chart. We're going to draw this together, this downtrend channel. You can see that there's attempts in the decline to pause on the way down, and they're all approximately of equal character on the way down. When we draw downtrends, we're drawing a supply line over the top of the market. It's called a supply line. And so let's draw that here, and we're going to take and touch this peak, and we're going to touch this one, and we're going to touch this one right there, and we're going to extend this down. And this is our supply line. This is because in the attempt to advance, supply becomes present when it reaches the supply line. It's just the opposite of an uptrend. And so we can see that there's a sharp decline that tends to hold the stride of the decline all the way through to the bottom, to the climax. Okay, so now let's draw the parallel, which is our oversold line. And we will draw that on this low right here. And so we can see that we draw that, put that right there, we can see it's a somewhat tight channel, but, and we're going to draw this as a dotted line because we want to identify this as our oversold line. And so here's our supply line here. And notice how the attempts to throw under the channel and become oversold are turned back into the channel. Attempts to become oversold, turns back into the channel, is able to go sideways. There's no lift in this market at all. It just goes sideways and goes above the supply line temporarily and then turns back down. And then look what happens. Right at the selling climax, very steep decline, exhaustion type decline. It goes down, touches the oversold condition in the channel, turns up, comes through the supply line area and tests it, but cannot go back in again. And then there's just an instantaneous change of character. Fascinating condition. So now let's draw a trend channel for the uptrend. So here we're going to use a different technique. We're going to use what's referred to as reverse use of trend lines. And so we're going to find two adjacent peaks, which is here and here, here and here. And we're going to draw those and get a, and notice this. Notice that this peak also is part of the stride. So it's possible that you could actually draw the channel on these two peaks right here. We chose these two, but either one has effectively the same value. So here we're drawing a solid line because this is the overarching reverse use of trend lines. This is where supply comes in over the market. So supply comes in up here, and then as it comes down into an oversold condition, here's our intervening low. And so we're going to draw a channel here. You can see it's not come back down and touch that. It may come into play in the future. Notice what's happened here is that we have an overbought condition. Now, as Crude attempted to come through the channel, came back in, has done it again. Interesting condition. The only other thing I want to show you here is that there is another way to draw this, and that is on these two adjacent lows right here. See those? Right here and here. And so we can draw a parallel here, and look what we get. Pretty much the same thing. So you could draw this either way. Has the same value. It's because the stride's in force. So this wonderful stride is been carrying this advance at a rate since it turned up off of this initial low point. Now, I had pointed out that there was a distribution up there that we wanted to take a look at. Well, here's our point and figure chart, and this is a one box reversal method. This is based on daily data, standard scaling, and here is our distribution that we're going to count, and you can see that very steep decline, which carried downward for some number of months. That when we take this count, we have a beautiful count objective down here that came within one box of a perfect hit of the low at $43 on the climax. So you can see the very steep decline, you can see the attempt to pause, and then the climactic surge. Well, this proved to be a part of an accumulation, cyclic accumulation at these lows, and we can draw now an accumulation for an advance, take a count. And so here we can see that this count takes us up to approximately 64 to 73, and that's because the count line is so much higher than the low. So this is quite a wide period here. But if we take the intervening middle level of this count right here between this high and this low, it's about $68, $69. And so this is the midpoint. When we have a very wide count objective, we tend to take the midpoint. So you can see here that we are now in the objective range of the accumulation area that we've taken this count on. So at any point, we could see crude oil pause and reach a level where it wants to either pause or builds an account for reaccumulation, builds account for distribution. At this point, it's too early to tell, but notice the acceleration upward here has the qualities of a climactic surge, which could keep going for some period of time. Could get up to the 69 area, could go all the way to 73. So that's entirely possible. We have to look at the vertical chart and really focus on the characteristics of how it's trading as it's pushing up into these objectives. But remember this, that on the trend channel that we just drew, it's now over the top of the channel, which is an overbought condition. And so this is going to be very interesting to watch because we have a point and figure count that is now in the range of being fulfilled, and we have an overbought condition on our trend channel, which means that we may get, again, some kind of a pause or a reversal. At this point, we don't have the cause built, so we'll just have to keep an eye on it. Here is the railroad industry group. And this also goes back to the beginning of 2016. Really beautiful industry group in this bull run. So here, let's draw the trend line, but let me point out something. Here is the decline off of a distribution area here. You can see a downtrend. And so we have drawn off of this peak and this peak, we've drawn a overarching supply line. You can see there's an attempt to throw over the top, which becomes overbought, and then falls back in because there's supply present at the supply line. And so attempts to come back down and becomes oversold and climactic in the area of the oversold line. And so here it becomes oversold, comes back in, oversold here, turns back up, and then comes out of the channel, concluding the decline. So this is a really great example of a downtrend. You can see the relative strength here. The relative strength is very weak. This is an underperforming group in a relative strength downtrend, and then it turns up. And right about here is when it goes into its relative strength uptrend. Well, look at this uptrend. From the middle of 2016 onward, notice the remarkable leadership of the railroad stocks all the way up here. And so this has been a tremendous relative strength leader. But what we want to be able to do is we want to draw the trend channel. So I propose that the two adjacent lows early in the uptrend that have approximately equal extent and duration in the decline is here and here, this low and this low. So let's just draw this trend line and see what we get. And there is the what we call the demand line, excuse me. And now let's draw the overbought line, which we are going to put the overbought line on the intervening adjacent peak, which is right here. And we will draw the parallel right there. And let's make this a dotted line so that we know that this is an overbought line and this is our demand line. The solid line is always the preliminary line that we draw so that we know where our 2 points are. And I circle them on the blog so that you can see where I'm doing the construction. So look at this long stride that was defined by these 2 points and this overbought point. And attempt to become overbought here, comes back in, rides along the top of the overbought area, tests it repeatedly, and then fails back down to the demand line again, where it sets up for another important advance, becomes overbought again, comes to the demand line, becomes, which sets up another condition. These are buying conditions. And then a rally that gets very close to the overbought line again, doesn't touch it. That's kind of a clue, because when you can't get all the way back up to the overbought line, this is often a sign of latent weakness. And then look at the decline that we've had down and out of the channel. Notice how when you draw the trend channels and the trend lines, how it really makes these charts go from 2D to three-dimensional. And so there's a whole area, there's all these things that you can pick up by drawing good trend lines, good construction of trend lines. So here, deeply oversold, well, look what's happened. It's rallied up, important rally, it's back into the channel, barely. And you can see here that there's a bit of a climactic surge at the end of this advance, a tail on this last bar, really interesting. We're going to want to see if this industry group falls back below the channel, because this could be an indication that we have a big change of character in this. May go into a big trading range, who knows. But this bout of weakness here is the most important weakness throughout this whole trending area. And so this is in and of itself kind of a change of character. So we will be keeping a really close eye on this demand line and the ability to hold it, and whether it can rally up to the top to the overbought again. Very briefly, I just want to show you this distribution area that we looked at here over in this area, important distribution. And you can see here, this is a 3-box reversal, standard scaling. This is on an index, so you can see 10-point scaling. So we have 570 points of potential in this distribution area, which counts downward below the bottom of this chart. One thing I want to show you is this volume bar here. Notice this. Look at how much volume there is on this break off this peak. This is a huge sign that there is supply present, and it's coming in very close to the end of the distribution on this point and figure chart. So here, this green area is what we just looked at, and I've flagged the count, and you can see how beautifully it picked up the last decline into the climax on the railroads back in the end of 2015, early 2016. And so this area right here was the final low objective, which is right before the final climactic surge downward and the change of character. Really nice work. And then look at the relative strength. Notice how the relative strength is not confirming the uptrend any longer after it was in a good uptrend, and then it became relative strength laggard all the way down, big downtrend in relative strength, and then forms a base. Okay, so let's move on. Now we're going to look at trucking and do a trend line analysis on the trucking. Okay, so there's two ways we can approach the trucking index here from a trend line construction point of view. One is the traditional method of trend line construction, where we draw the demand line first. So let's do that. And so we're going to choose two areas of approximate extent and duration. I think they're here and here. So we're going to draw a trend line here off this low, and one here, and we will make them solid. So here you can see that this is the stride that we're working with, and this pullback off of this, what appears to be a distribution area, has become slightly oversold below the demand line and has rallied back up in again. So we will want to draw the overbought line. So let's draw the parallel. We're going to put it on this peak right here. Make it a dotted line so that we know this is the overbought line. Normal use of trend lines. We can see here an important rally up and out of the channel. Cannot make any progress beyond that. It comes back to the channel once, rallies up, overbought again, can't pull away from the channel, and then does it a third time. This appears to be an upthrust after distribution. Discussion for another day, but look at the failure. Comes back in, and when it comes back into the channel, it just makes a beeline right for the bottom of it and becomes oversold, where it produces a rally. But so far we're just in the middle of the channel. What we're really going to want to know is whether it can rally back up to the top of the channel, or it's going to fail here and go back down to the demand line and hold or fail. And so far, there's a lot of reasons to think that this isn't a very strong situation. Okay, so that's one trend channel construction. Let's do another one. And so here we're going to do a reverse use of trend lines, which actually sets up a trend condition a little bit earlier, because we're taking it off this point and this point, and then we will draw the parallel off of this low right here. So now we see reverse use. Well, this is interesting. Steeper rate of advance, slight overbought condition, becomes, after becoming overbought on a climactic surge, it fails back into the channel, attempts to rally back up to the supply line, again, touches it, comes back down, rallies up again for a third time, but can't get above the channel. Let's extend this out a little bit. You can see there's a touch here, and at this touch, there's just a failure down and out, and there's an attempt to hold at the oversold line, and then just fails right through there. So this is a very interesting chart. Two constructions. How do you choose which one to draw? You draw them both. Make two charts, draw them both. Just draw the trend lines that you see, and eventually you'll get a sense for which one is the dominant and more important one. Lastly, just to tie these together, we looked at crude oil. We saw a pretty dynamic rally in crude oil that's occurred in 2019, and now we see an acceleration in crude oil as it pushes up into a point and figure count objective. But we don't know whether or not this is going to be a brief pause with further advance, say up to the higher objective, getting to the top of the range around 72. No reason to think that can't happen. But the important thing is we looked at two different transportation sub-industry groups. We looked at trucking, we looked at railroads. In trucking, we see that there is an advanced completed distributional structure that's taken place in trucking. Trucking is a more expensive way to move goods than rail. Rail is very efficient. Trucking is very much affected or impacted by fuel costs, gasoline costs. And you can see that fuel, gasoline, crude oil has basically gone up pretty dramatically in 2019 and has, I believe, been a drag on the trucking stocks. At the same time, you can see that the railroad stocks have been done quite well and have continued to lead because they are the more efficient way to move goods and is less impacted by the input costs of fuel prices. So this is a interesting situation. It's possible, looking at railroads, that they may actually be pretty overbought and that there might even be a change of character coming in the railroad stocks in the near future. But the last thing I want to look at here is I want to look at this Anadarko Petroleum. And you can see we can draw trend lines on point figure charts, and look how well this worked out. But I just want to say goodbye to this wonderful trading stock, Anadarko. And with that, I'm going to say thank you for joining, and had a great session. Draw lots of trend lines, and we'll see you again sometime soon.